Hi, in today's video I'm going to look at gilts, which is basically a fancy name for UK government bonds. And I'm going to look at how they work, why they're important, and whether you should invest in them. Now basically, a gilt is if you invest in a gilt, you're lending money to the British government and in return you're getting an IOU. So let's do an imaginary gilt. Governments issue gilts all the time when they need to borrow some more money. So let's say that last week the government issued this new gilt, 4% Treasury gilt, 2038. And I came in, I invested £1,000 in this new gilt. And because it's got a 4% yield, the government's going to pay me £40 a year. They'll probably pay it in 2 instalments, £20 twice a year, in what's called a coupon. And then in 25 years' time, in 2038, I'll get my £1,000 back. So that's fairly simple, nice, predictable investment. I invest £1,000, I'll get £40 a year for the next 25 years, and I'll get my £1,000 back in 2038. Lovely. But you might say, well, what happens, if I want to get my money back early? Well, you can sell your gilts on the financial markets just like you buy and sell stocks and shares. But just as with stocks and shares, the price of gilts changes. So let's imagine I want to sell my gilts now on the markets, but I can only get £900 for my gilts. So the new investor, he's paid £900, but he's still going to get £40 a year in income, and he's still going to get £1,000 in 2038. So his yield is going to be higher. Because he only paid £900, his yield is going to be, let's get this right, I need to get this right, the number right, 4.44%. So that's what's called a running yield. And he'll still get his £1,000 back. So he makes a profit, he gets £1,000 back on his £900 investment, and he also gets a bigger percentage yield because he's still getting £40 a year. On the other hand, the value of the gilts could actually rise, and I might be able to sell my gilts for £1,100, even though I paid £1,000. And if that's the case, the running yield will be lower at 3.63%, because that's 40 divided by 1,100, and I'll make a loss on my capital as well, because I invested £1,100 and I'm only getting £1,000 back. Now you might be wondering, why do gilt prices move? Why do the yields change on the financial markets? And it's basically, it depends on what people are expecting to happen to interest rates and inflation in the future. If people change their mind and think actually interest rates are going to be higher in a couple of years' time than we had previously thought, then the price of gilts falls. Because, if you're expecting interest rates to be 3% in 5 years' time, then a gilt that pays you 4% a year looks pretty nice. But if actually suddenly we change our mind and you think actually interest rates in the economy will be more like 6% in 5 years' time, then 4% looks a much less attractive return. And so when the expectations change, when people think interest rates across the economy are going to be higher, then the value of gilts falls because a 4% return ain't that attractive anymore. Now, so you might be thinking, why do people invest in gilts? Well, the primary reason is that they're normally seen as very safe and predictable investments. The British government has never defaulted on any gilt. On any gilt that's been issued, people have always got that coupon, that £40 a year, and they've always had their money back at the end of the bond's term. Now, some people say, given what's happened over the last few years with the financial crisis, perhaps gilts aren't quite as safe as an investment as people once thought. And we could debate about that all day, but I'd still say I still think gilts are a pretty safe investment. And the other attraction, as I say, is this regular predictable income, which is especially attractive for people who are, say, retiring, and pension funds like to invest in gilts for exactly the same reason. And in fact, the regulator insists that pension funds invest a substantial chunk of their assets into gilts. Now, another interesting point is that actually gilts have performed exceptionally well as an investment over the last 20 years, much better than they normally do. And one big reason for that is because for most of the last 20 years, inflation and interest rates have been relatively low, and in that kind of environment, gilts do well. And then more recently, we've had a situation where with quantitative easing, the government has been printing money to buy gilts, so that's obviously pushed up the price. If you like, the price has gone up from £1,000 to £1,100, and then the running yield has fallen. And also, pension funds have become keener and keener to buy gilts and get that safe income, and the regulator's been telling them to buy more gilts. So those are all reasons why gilt prices have got so high and gilt yields have got so low. And because that's happened over the last 20 years, I'd be a bit reluctant to invest in gilts now. If you went onto the financial markets today and wanted to buy a gilt that would pay out in 10 years' time, matures in 10 years' time, you're only going to get a yield of about 2.6%. That's exceptionally low, and I really suspect that interest rates will go up in the next few years, and then a gilt that's paying 2.6% a year won't look terribly attractive. So for most people, I'd say gilts aren't a great investment now. But you should still understand how gilts work and keep an eye on how they work, because gilts will still affect you one way or another, even if you don't buy any. Gilts affect mortgage rates, especially fixed rate mortgage rates. They affect how much income you'll get in your retirement. If you've got a private pension pot and you're going to use that pension pot to buy an annuity when you retire and get an income, if gilt yields are low, so if this figure's low, if it's 3.63%, the annuity you'll get on your pension pot will also be low. And of course, if gilt yields are low, that means that the government is borrowing cheaply. So that's a big advantage of if the gilt yields are low, the government is borrowing cheaply, so your taxes, a smaller proportion of your taxes are going towards interest payments, and so the government can use the money for other things. But as I say, they're important, they affect all of us, but I suspect for the next few years, gilts aren't going to be great investments, but they're still worth keeping an eye on them, and at one point they'll become cheap again, and they'll be a great, low-risk, safe, predictable investment. That's the lowdown on gilts for today, and so until next time, good luck!